Good afternoon, participants. We'll just start in another 2 minutes. I hope everyone has filled the attendance form and the feedback session. That is the first session.
지금 0127.
Very good afternoon, Mitra sir.
Good afternoon.
Good afternoon, sir. Sir, shall we start? There are 63 participants who have joined. So should we wait or should we start? What do you say?
Wait for 2 minutes, then we start.
Sure, sir. Okay.
Madam, I suppose we can start.
Yes, sir, we can start. Okay.
Right.
So welcome back to all the participants, and it's time to introduce our next speaker for the day. Is this PPT visible? Yeah.
Yes, ma'am.
Okay, the PPT is visible. So let me introduce to a pro leader who has proven his leadership for 23 years, Dr. Sujit Maitre. He is a principal for Sri Banjani City College, Nagpur. He has done his BE, MBA in Finance, MA in Economics, MCOM, and he is also empaneled with SEBI as a financial education resource person. One thing which is again going to surprise you about this expert speaker is that he has cleared net in management as well as net in commerce. So please correct me if I'm wrong. I think you have cleared net exam in the field of management for consecutive 3 to 5 years. If I'm
Four.
not wrong, I'm just confused. So that's why I'm asking you. So please correct me if I'm wrong.
Go ahead. Go ahead.
Okay. So he is a member BOS, a BOE in Business Management, RPM, Nagpur University. He has completed 6 MTP certificate award from SMFI for teachers in strategic management area. He is also visiting and a contributory faculty at various B schools, which includes IMT Nagpur, Symbiosis Institute of Business Management Nagpur, DPM Nagpur University, etc. He is also a session chair and panelist for various national and international conferences. I would request the participants to please mute your mic. You can unmute your mic when you have any query. He's also a trainer for NCFM Mutual Fund and Financial Derivatives module. He's been awarded with Best Professor in Strategic Management area for IDMBA Hyderabad. He has a proven research output with 31 publications, which includes Web of Science, ABDC, and Scopus index papers. He was also a reviewer for third Pan IM World Management Conference IM Indoor, and he is also a reviewer for four Scopus or ABDC journals. Apart from this, he was also visiting professor at ISC AI Frankfurt. So over to you, Matrix. He is going to speak on balance sheet reading skills and why it is important.
Screen recorder or screenshot.
Okay, please enable that.
I'll just
Screen
ask the participants to mute the mic. I would request the participants to please mute your mic.
You also have it?
If we can do it from our end, we can do it. And I need, yeah. Madam, I need permission to share screen. Visible?
Yes, sir. It is visible.
Great, great. Okay, so welcome on this day one, session 2. And the agenda here is balance sheet reading skills and why it is important. So those who are comfortable reading balance sheet need not take this session seriously. Those who don't know anything about it, they also need not take this session seriously. But those who need little bit of it, right, try not to be serious. Let us start with this. Normally, we do ice breaking because this is a FDP and it takes a lot of time to align, because normally the faculties are not used to listen, right? And if it is in online mode, the choice is wide open. So let us understand that we are on one single platform, and that single platform is not Zoom, but we are talking about the academic orientation. So let us understand this. This is a famous 853 problem, and for last 23 years I am using it, and therefore I say that it is a famous problem. So how many of you can see what is there in the slide? Dr. Raja. Dr. Raja.
Yes, sir. I can hear you, sir.
Okay, so please answer my question, Dr. Raja.
Yes, sir.
What can you see on the screen? What do you think that I have drawn something, right? Three diagrams.
853.
Yeah, that is, these are numbers, but then these numbers are inside one diagram. So what do you think is this? One horizontal line, one vertical line, or two vertical lines? What does it make? Is it making any sense to you?
Sir, can I answer?
Yeah, you can.
Sir, it shows that all the item under this section that is given 8, the total is 8 for all the items that come under this horizontal block.
Great, great, great. Now look at this structure here. One vertical line, one horizontal line, another vertical line. What do you make of this?
A basket or a container?
It is a container. It is a container. Okay, I will take that answer. It is a container with a capacity of 8 liters. Is that okay now?
Yes, sir.
Yes, sir.
Okay. So there are another, say two another containers size. One is having capacity of 5 liters and the last one is having a capacity of 3 liters. Right? Yes, no. Okay. So let me pose to you a problem of constraints. And the constraint is like this, that we have got 3 containers. The containers don't have any mark on it, but we know that it is having different capacity, like 8 liters first container, 5 liters second container, and 3 liters third container. Right? One more additional information you have, that we don't have any other resources. We don't have any measuring jar to measure the quantities. So definitely we are trying to measure liquid, and let us call that liquid as milk. So let us assume that this is a milkman's problem, wherein the milkman is having 3 containers having 3 capacities, 8, 5, and 3, out of which this 8-liter capacity container is full with milk. That simply means that the milkman is having 8 liters of milk for distribution. Is this thing understood? We can open the chat box also, and through chats you can answer me. Yeah, right. Okay. So through chats you are answering me, and that is, you have understood that 8-liter container is full with milk, whereas 5-liter and 3-liter containers are empty. Is this thing clear? Great, great, great. So stop responding. I understood that you have understood. Now the question is that you receive a call from your regular customer who is saying that he is in hurry. He is not having time. So he will be coming in 2 minutes to collect milk, and the quantity required by him is 4 liters. The quantity required by him is 4 liters. But now using these 3 containers only, out of which one container of 8-liter capacity is full with milk, how will you separate 4-liter quantity? So before you start anything, you need to know that there are no marking, and I am not going to allow you your judgment. I want this 4-liter quantity exact one. So with these constraints in mind, the constraints are, you don't have measuring jar, you don't have any other resources apart from these 3 resources, right? Out of which 2 are empty. You can start your thinking process now. I need to separate out 4 liters. I think you will require only few seconds to answer this.
Sir, may I try, sir?
Yeah, you can.
Sir, from 5 liter, we can pour
5
to 3
liter
liters.
is, 5 liter is empty.
So from 8 liters, we have to pour. You have to pour to 5 liters.
Okay.
So from 5, we can. If you pour to 3, then we will get 2 liters.
How?
Am I right, sir? Because this 5 liter container is having 5 liters capacity.
Okay, okay. Okay.
From
So,
5, we are pouring 3.
so the remaining quantity is 2 liters, right?
Yes, sir. May I go on that way?
Okay. I need 4 liters to separate.
So again, second
Where?
time I am doing, sir.
Where will you keep this now? 2 liters.
I will ask the customer to.
The customer is yet to arrive.
Oh,
Constraint.
Good afternoon, sir.
Yeah. May I know who is this?
just talk this, Dr. Satish Kumar.
Soumya here. Sorry, sir.
Okay. Please.
First, we can use the 3 liters to give, and we can take a 5 liters can to give further 1 liter, so that we can we have that storage also. No? That's
How will you separate out 1 liter?
by measuring through eyes.
That is what I said. I don't want your judgment.
Sir, again I will come, sir. Actually, sir,
Yeah.
from 8 to I am pouring to 5. 5
Yeah.
to 3 I am pouring, sir.
Yeah.
So 5 will be having 2 liters. I will empty the 3 liter again to 8 liters. So
Okay.
3 liter jar I will use for this one for empty actually.
Okay.
So now it is with 2 liters.
Okay.
Again, I will pour from the 8 liter container to the 5 liter container.
Right.
Then also, no, sir, I can't. Sorry, sir.
No issues. You are trying. At least your first step is right. Anybody who wants to try now? I said it is a 853 problem, and I think this type of puzzles we used to attempt in our standard 8.
Yes, sir. I want to try. Hello, am I audible?
Yeah, you are audible. You can try. What is your name?
My name is Binay, sir. Binay.
Okay, please move ahead.
Okay, so first you put 8 liter wala thing into 5 liter.
Yeah.
And 5 liter wala thing into 3 liter.
Right.
So you 3 liter, you have 2 liter, and you have 5, like 3 liters.
Right.
In 8 you have 3 liter. In 3 you have 3 liter. In 5 you have 2 liter. Okay.
Right.
So 3 you put in the 8 wala vessel. You have 6 liter in the 8 wala. And 2 liter in 5 wala and 0 liter in 3 wala. So you put 2 liter in the 3 wala. So now you have 2 liter in 3 wala and 6 liter in 8 wala. So from 6 liter you put like from the 6 liter you put in to 5.
हम लोग अंदर रजिस्टर सर आने के बाद अंदर बात करेंगे।
Aarti.
Yes, sir.
If you want to answer. Otherwise, keep the mic mute.
No, sir, I want to try.
Okay.
Sir, first of all, from 8 liter, he will fill that into 3 liter, and then 3 liter will be emptied into another vessel.
Which vessel?
And again, the same way, he will empty one more time 3 liter into another vessel.
Where is that another vessel?
Sir, the person's
He is yet to arrive.
The person may be
He is
carrying
yet to
another-
arrive. Yet to
Sir,
arrive.
let me try, sir. Sir, let me try.
Who is this?
Sir,
Raghavendra.
Raghavendra.
Raghavendra, please.
Sir, first I will empty this 8 liters to 5 liters, first into 3 liters,
यहाँ से आगे वो
and then 3 liters will be put into 5 liters
function
jar.
हो
Again,
जाए।
I fill the 3 liters. So I will left with 8
Here,
liters
there will be demand.
container having 2 liters.
Okay.
GB also
And I
said
will
that
pour
it
it to
has
the
to be
customer.
on the website itself.
Whose mic is on, please?
यानी कि user ने
If you are not interested, you can mute.
बोल देंगे तो हम लोग कोऑर्डिनेट कर लेंगे, बट आप थोड़ा उसके
Hello.
कान में
Who is this? Can anybody identify the person who is talking? I am unable to.
So that's Dr. Dipali Garge.
Dipali, can you request her at least to keep mute?
Sir, I am sending her continuously message on
Okay,
WhatsApp.
can you mute on your side?
No, sir. Actually, you are the host. So I'm not able to do it.
Okay. I'm unable to get her. Okay.
Dr. Dipali Garge.
I think she got muted.
Okay, no issues. Okay, so Dr.
Sir.
Anuradha, you want me to repeat my question?
Sir, let me answer.
Yeah, you can. Please.
Yes, sir. Sir, first I will pour 8 liters. First I will fill the 3 liters jar. And that 3 liters will be poured into the 5 liters jar.
Okay.
Again, I will fill the 3 liters jar. So I am left
Right.
with 2 liters in the 8 liters jar.
Okay.
That I will pour to the customer.
Where is
Now-
customer?
Okay.
No customer right now. Arriving shortly. There are no other resources. That is the fun. Okay. Now can I help you in getting to the solution? Yeah.
Yes, sir.
Okay. So I will like to help you getting to the solution. Why you are not getting to the solution? Let us understand how we are attempting this question. Right? How we are attempting this question. We said that we have something, right? And what is that something? Something is like this. These are the capacities?
Yes, sir.
Great. And what is the initial status? 8, 0, 0.
Yes, sir.
Right?
Yes.
Now see what is happening. There are two things happening. One, an individual is trying to attempt this problem. He has got his own understanding about this problem. He is calculating in his mind and he is trying to express his solution to the others. The important thing is that others are not on the same plane as you are. You are trying to suggest 4, 8 to 5, 5 to 3, 3 to 5. So they are with you for maybe for first 2, 3, 4, 5 steps. Thereafter, whatever you say, they are not with you. Only you alone are in the process. This is the first issue when you are trying to explain things to other. Is this thing clear? Is this thing clear? Okay. Dr. N. Anuradha, I will try to answer your query first. The problem was like this. There are 3 containers, 8, 5, 3. These containers don't have any mark on it. 8-liter container is full with milk. 5-liter and 3-liter containers are empty. We want to separate out this 8-liter milk into 2 parts, one each of 4 liters. Using these 3 containers only and without applying your judgment, right? Without applying your judgment, I want exact separation into 4 liters each. That means I want this 8-liter container to have 4 liters milk and 5-liter containers to have 4-liter milk and 3-liter container at the end of the process to be empty. So hopefully the problem is clear, right? Dr. Anuradha, the problem is clear. Now we are reaching out to the solution. Now let us go with this. You said that you are doing something. You said that pour 8 into 5. So what will be the status here? 8, 5, 0. Now the whole class is with me. Everybody interested in attempting this question is with me. They know what is exactly happening. Try to understand. Now the solution is on paper. Now the solution is on paper and the numbers are on paper. Now what was the next step? What you wanted me to do? 3, 2, 3. Total quantity 8. What next? Now, anybody who was trying to attempt right now, can you take this further? What else? What can I do?
2, 2, 4.
Wait a minute. I will go with 6 to Mama Maria. Right? She is saying 6 to 0 because she wants to pour this into back to this. So 6 to 0. What next?
2, 2, 4.
2, 2, 4. How? How?
602.
602 you want? Possible. 602 is possible. Okay, possible. What else? You are nearing. You are near to the...
3.
Great. It is 1, 5, 3. Not
No,
3.
152.
2. What next?
143.
Recording in progress.
At least you reach to the problem.
1, 4, 3.
Yeah.
So you wanted 4 liters. Now pour back 3 into 8. It will become
Yeah.
440.
We already got 4.
You already got 4. So problem is solved. Problem is solved. Yes, no.
Yes.
The problem is solved. The problem now is that can I finish off this particular process in lesser number of steps? So this is left to you. You can use this example not only for ice breaking but also for channelizing the energies and conveying the importance of putting the process on paper. Putting the process on paper so that others also understand it. In the manner you have put it, they also are in a position to understand it, right? So you need to understand the very purpose of this particular ice breaking exercise was multifold. I have achieved few of the objectives of putting this. At least now you are in tune with me. You know how I'm posing the questions and how I am receiving your questions, right? And hopefully now the class is on one platform as far as this particular question is concerned. What we are trying to understand in the next phase of this particular session is we are trying to read out the balance sheet, which to few will be easier process because they understand it. But for others, it will not be their cup of tea. They will say that, okay, I have enrolled into this program. That's okay. But then we are not very near to this accounts and finance things, right? And we don't believe on one thing that we will be able to understand this someday, right? So we'll try to make it as simple, right? To the extent that those who know it will get bored in the process. And therefore I said that try not to get bored, right? So let us understand what is on store, right? This is the first thing which we need to put forward whenever there is a class, a session going on. You should have your session outcomes like you have your course outcomes. The first is you will be able to identify the structure of balance sheet and set up the balance sheet equation. Second, you will appreciate the need of understanding balance sheet, right? Appreciation comes only after understanding it. Identify how a balance sheet is read. Understand the concept of window dressing, and last, evaluate the Altman's Z score for a company. So these two things are new concepts. So we'll understand this and we'll try to take it ahead, right? So first on the agenda is understanding what is it, right? What is it? So let us understand what is it. क्या दिख रहा है?
Sir, it's a prediction regarding the future.
Yes,
future में क्या-क्या होगा?
Future में क्या-क्या होगा? Okay, right. So now you try to understand. अगर if I'm claiming that whatever we are going to do today will be useful for future, right? Future predicting. Okay. I just wanted to know that
So can you please remove Karthik, sir? You can remove it if they are not keeping the mic on mute.
Okay. So is this the thing which we follow in normal classes also? So everyone here, if you are a faculty member and engaged in online teaching learning, you know that this is a routine problem. The only issue is that while we are conducting it, our reactions are different, and when somebody else is conducting it, our reactions are different. So we want uniformity across there also, right? So try to be as cool and calm as it is, right? Everybody is worried about the virus, and we are not worried more about the learning which is happening side by side, right? So let us understand, right? Satish Kumar, you want me to use this? Okay, so probably you are viewing it on your mobile. Now you can do it. Are you able to see? Yeah.
Yes, sir. Now fine, sir.
Great, great.
Yes, sir.
Now you can see the lines, right? Palmistry. Right. So you will require all those things which are mentioned here, right? And most important is the person who is reading. So there are certain lines there, and somebody is trying to interpret those lines. So likewise, balance sheet will have certain numbers, and we'll try to interpret those numbers, right? But first, we'll try to understand the very purpose of making balance sheet, right? So let us understand. So who needs to read, interpret, understand the numbers mentioned in the balance sheet? Who are the stakeholders in the process? Definitely owners would like to know what is happening. Those who want to invest into your company will be interested in knowing that, let me know the financial status of the company, right? There is third interesting party who also wants to understand how you are reporting your numbers. Because in most of the cases, apart from your money, you are using public money to run your show, right? You make public your part owners called equity shareholders, right? Or common stockholders. So what is happening here is that because it is not your own money, it is somebody else's money. So the regulation comes into the picture. So regulators also want to see how you are presenting, right? And whether the manner in which you are presenting is justified, right? Whether it is as per the act or as per the rule of the land, right? So they give you certain prescription that you should provide these numbers like this only, and these are the rules and regulations which you need to follow. So they will be evaluating your submissions like that. Who else will be interested in knowing the balance sheet apart from these three categories? Any answer to this, or that is all inclusive? Owners, investors who want to put in their money, or the regulators who want to check whether the process is going on smoothly? Who else will be interested in understanding the balance sheet? Definitely, apart from the members of this group who are here to understand finance, and I assume that you belong to non-finance background. Yes. Anyone? The answer
Customers.
is students, customers. Why students or customer will be interested in the balance sheet? Customer will be interested in the products, right? The services on offer. Why do you think that students will be interested?
Government.
Shareholders are investors. Government is regulator. Yeah, investors have that is there. Who else? Analysts. Okay, those who are trying to support the decision making for investors, right? Creditors, right? So the important answer to this is that those who want to give you loan also, not only investors into equity, investors into your debt. So bankers may be, or financial institutions may be interested in this. Portfolio managers as an investor will be interested in this. Underwriters will be interested in this. Why I have posed this question is I wanted to know one thing, that are you into it? How much you know about the topic? And I can clearly see that, yeah, I can clearly see that you are not very new to this particular topic, right? So let us move ahead and let us pose challenges to ourselves, right? Okay, why reading a balance sheet is important? Title says that it is important. So can you see this? Why is it important? It is important because he says it. Who is he?
Warren Buffett.
Yeah. So every reason to follow, right? Warren Buffett, right? The most successful investors and the person who has accumulated a lot of wealth by doing this. And he says that this balance sheet or financial statements is a language of business. Business is trying to speak out, and the way in which they will speak out is this one, right? So what is that language? It is this language, right? So numbers, the contents of the balance sheet and profit and loss account are, we will say that are the language or words through which a company is trying to speak out to the external world or to their stakeholders, right? If you want to invest into it without understanding this language of business, you should not enter into it, right? So the reason why I want to deal with this topic is that because he is saying that everybody who is connected to this must invest, and those who are investing must understand where they are investing, right? What is that a platform, that what is that position, geographical position, and where it is moving. So that all those things we need to be understood by the people who are interested into this process, right? So let us move ahead. So there are three statements, and I suppose that the first session was dedicated towards this is, right? So three statements. One is cash flow statement, second is profit and loss or income statement, and the third statement, which is the area of concern right now, that is a balance sheet, right? So every business organization finally ends up with the preparation of financial statements. So these are three financial statements, and we are going to deal with one of them, right? So what is a balance sheet? We will dwell upon this particular slide for a while, right? It is also known as the position of a statement, right? So we know that we take snapshots. We know that we take snapshots, right? So snapshot is for a year or snapshot is for a moment. Okay, I'll try to get the answer. For a year, for a financial year. Okay, great. So snapshot is for a financial year. That is what the answer I got. Let us move ahead saying that what does it reflect? It reflects the financial position of a business in terms of assets, liabilities, and equity on a particular date. Now, whenever I say that this is a balance sheet of a company on 31st March 2021, 31st March 2021, right? What I can expect from this particular statement, whether I am going to get the data for last 1 year as suggested by someone that it is one financial year's data, okay, or it is a data pertaining to the company from its birth.
It's 1 year data, starting from April 1st, 2022, 31st March 2021.
Great. Okay. May I ask you that what is your weight today? And if the answer is my weight today is 56 kg, on a particular date. So on 17th of Jan 2022, my weight is say 56 kg. So is it a weight on a date? Is it a weight for last 1 year, or is it weight since birth?
On a particular date. It's today only.
It is today only, right? But where I have accumulated it? From when I have started accumulating it? Okay, I am getting answers. So since birth and particular date, Rajni, I suppose is.
Yes, sir.
Yeah. So your answer is from?
Since both. Because balance sheet is a kind of statement. Let's suppose if you are talking about the assets, let's suppose we are being individual and whatever assets are there or whatever liabilities are there, it is from, it's like, it is not from like from this year, from this month. It's not like that. So owner अगर किसी चीज का है, obviously it is from the starting, like
since birth.
Profit loss हम कह सकते हैं कि मुझे इस साल में whatever the loss, whatever the profit.
We are talking about balance sheet.
Yeah.
We are talking about balance sheet and it is as on date, but whenever it is as on date, we are referring to the period since its inception. Since its inception, right? So it captures the data which is relevant for all previous years, but its position today. Its position today. Is this thing clear? So you say that it is 56 kgs today, but it was 1 kg someday, 2 kgs, 4 kgs, 10, 15, like that, right? Maybe touch 70 kgs, came back to 56 kgs. Possible. Possible. As on date. That simply means that tomorrow it can change. So 31st March and 1st April, the balance sheets will be different. Are you in a position to understand this? When it is saying that as on particular date, it simply means that the things can change very fast. Maybe at the beginning of the day, if I am trying to make my balance sheet, and at the end of the day, if I'm trying to make my balance sheet, there can be 2 different balance sheet on one single day. Timings are different. Is this thing clear? Timings are different. So you need to understand those things, right? So with this confusion in mind, let us move. So when we say that it is a financial statement, it is the value of each component of assets, liabilities, and equity as on a particular date, usually at the end of the accounting period, because there is no need, right? Either you do it at the end of the quarter or you do it at the end of the financial year, right? Which to us is 31st of March, right? So balance sheet is also known as summarized statement of assets, liabilities, and equities. We'll be going into deeper understanding of assets, liabilities, and equity very, very soon, but we need to understand. So let me check. I have got 4 more responses. Since birth is correct, it is accumulated assets, liabilities. So thank you. Okay, admin is saying, right? Right. So this slide is clear to you. Balance sheet, balances. Statement number 1 says that the right side of the balance sheet consists of assets and the left side consists of liabilities and equity, right? Normally, a common man talks about this or refers to this particular position, left and right position, okay, during marriages. Right, during marriages, where what is the position of the husband, what is the position of the wife, right? Normally it says that but the husband's on the right side, the wife's on the left side. Right, this is what you say, but this is for the readers, right? If you go to the side of the husband and wife, who is on the right? right? So we will go by some notion which says that, to me, if I am looking at a balance sheet on a paper, normally in a T form, right, I will see that anything mentioned on the right hand side of that balance sheet will be asset, and on the left hand side will be liability, and coupled with it the equity. So there must be a question in your mind that how can a equity be a liability? We'll try to answer that question also, right? Logically, the total of the left side, liabilities plus equity, should match with the total of the right side, that is assets. And when we see a balance sheet, the balance sheet appears like this: the total of both sides match or balances, right? So hopefully there are 2-3 what I can say issues to be settled. As we move to the next slide, I will not explain it right now. I will move ahead, right? And I will try to understand this particular thing. The name balance sheet is given because both sides match. Is it true or false?
True.
True. Okay.
True.
True. Okay. Anybody saying false? Yeah, one chat. I will take that. Okay. Dr. S.K. Ghai is saying true. Okay. No, it is not true. It is called balance sheet because it is a sheet containing balances of other accounts. I repeat, it is called balance sheet because it contains balances of other accounts. So whatever you see in a balance sheet is coming from some other accounts. So the company, the firm, maintains separate accounts for everything they have. That is, they have a separate account for assets, separate account for liabilities. Under assets also, they have got separated the accounts, right? So whatever is happening at the end of the period, you have certain closing balances. You take those balances to one statement called balance sheet, and therefore that balance sheet is a statement of balances, right? So try to understand, even if you don't understand why it is false, the answer, why your answer is not true. It say, when you say, right, Suchitra or Dr. S.K. whenever you say that it is balancing, therefore I am saying that it is a balance sheet, it is okay as far as a layman is concerned, and we understand that we all are doing this course because we are laymen, right? So for us, it is true, both sides balances. I can see a balance sheet. Below also, it is saying that it is balancing. Total of left hand side is matching with total of right hand side, right? The only problem with this balance sheet is that it is not going with whatever I have said. I said left hand side is equity and liabilities, right hand side is assets, right? But it is something different. And why it is something different? Because it is mentioned in dollar, and what happens in dollars is that in India we have left hand drive, they have right hand drive, right? Geeta is trying to write something. Okay. True, right? Let us move ahead. So what items appear on a balance sheet? I said 3. First is what the company owns, called assets. Second thing, what the company owes, that is liabilities, right? So if the company is expecting something out of one asset, right, or something out of one, what you can say, item available with you. For example, suppose this, you can see, what is this? It is a paperweight. Okay, I am sitting into my room. It is a college, and for a college, paperweight is an asset.
Yes, sir.
Paperweight is an asset, right? Right. So why? What is the characteristic feature of this particular paperweight?
We can easily move.
Okay, I can easily move. Okay, I will take it or extend it little bit. I can convert this. I can liquidate this. I can sell this and convert this into, yeah, I can convert this into cash. And when I convert this into cash, the cash will come to my pocket.
Yes, sir.
The cash
Yes, sir.
will come to my pocket, and therefore I say that anything resembling to this feature will be called as asset. Anything in due course of time, sooner or later, if it is going to be converted into cash, technically liquidated into cash, I will say that it is asset for me. Yes, no?
Yes, sir.
Good. It is an asset for me. Liability. Anything which converts itself into cash or liquidates itself into cash sooner or later is called liability. What is the difference?
Which goes from me.
Yes. This time the money will not come to me. It will go away from me. It will be out of my pockets.
So, for example, bank loan, you have money, but it's not yours.
Okay. That is also, say you have money, it's not yours, but sooner or later you will have to pay back to bank.
Yes, sir.
So it will go out of your pocket, right? Liability. Okay, got it?
Yes.
Okay, and what is equity?
It's
Why
owner's capital.
equity is included into liability? Whose liability is this?
Because, sir, as per accounting rules, owner and business are two different entities.
Yes, yes. True. So
Owner's equity is the liability for business. If business is different with is
Right.
a different entity.
right. So it is a balance sheet of a business, and for business, even if you are owner of that business, you have given money to that business. So business will treat it as its liability. One day or other, business will assume that I will have to return this to you. You are my owner. Okay, got it? So equity that way qualifies for a liability. That simply means one day or other equity shareholder will like to get back his or her money, right? Maybe it is 10 years or 100 years, I don't know, but then that is how the things are, right? So let us move ahead. Let us move ahead with these three things in mind. This is a small business example and you will get it anywhere if you surf a little bit. I just check out the chart, right, every now and then. Okay, just to check with what is happening, right? So in order to understand, this is a one-day business example. I will say small business example. It is your example. Assume that you are into trade of something. Let us assume that you are selling this or selling mask, as it is mentioned. You set out of your home with ₹100. You go and buy 100 masks for ₹100. That means per piece ₹1 per mask. Okay, then you take those masks to a marketplace and sell off those masks at ₹5 each. So I hope that these three things are clear. You started in the morning with ₹100 in pocket. You have given out those ₹100 and bought 100 masks. Right now, you move to the marketplace wherein you are trying to sell off your mask. The price you have set is ₹5 and you are selling those masks. At the end of the day, you sell all your masks. You go home and start next day in the similar fashion. Start next day in the similar fashion. Hope the business model is understood, everyone, what this gentleman is doing, right? You are moving out of home with ₹100. You buy 100 masks, you sell 100 masks, right? And you come back home and you are ready for the next day, right? So hopefully this is clear to you. In case there are issues, we can revisit this slide one more time, right? Okay. So for that one day, the balance sheet will look like this. I don't know, because we need to put those things. Liabilities, we said that equity. Who put in that 100 money? It was your own money. So it will come into liability side under the heading of equity, right? So 100 rupees equity, you can clearly see that this is what I am referring to. There should not be any issue here that why I have maintained 100 here, right? Okay. With this 100, I have bought 100 mask worth 100 rupees. Is this thing clear? The right hand side of it? The inventory of my business?
Yes, sir.
Okay. Right. At the end of the day, I have sold it off. Right? I have sold it off for rupees 500. So what is the net income I have generated in the process? The goods worth 100 rupees were sold at rupees 500. So that resulted into a profit of
400.
That resulted into profit of 400, right?
400.
400. So I have mentioned it profit. Whose profit is this? I call this as net income. I call this as reserve and surplus or plain profit, whatever. Whose profit is this? Business?
Yes.
It's business profit, right? Right? It is also mentioned on the left hand side, liability side. Why so? Because the firm thinks that it is my owner's money and the profits belongs to the owner. So one day or other, they will go to whose pocket?
Owner's pocket.
Owner's pocket. Can I correct on the right hand side, the asset side? What has happened to this amount of rupees 100? Can I make this as a 0?
The end of the day, the inventory will become 0, sir, because he has sold it.
Okay, so I have sold it 100%. So I don't have any inventory now. I am ready for the next day, but today I don't have anything. So there is the inventory is converted into cash. The inventory is converted into cash by the process called selling. Two sides match, and I move to the next day. Two sides match and I move to the next day. Hopefully the things are clear. There are only few things to be mentioned. Assets, right? Liabilities and equity. Is there any mention of liability here?
No.
No. So no. The liability will arise only when I am involved into something wherein at the end of the day or within few days, I am required to pay. I am required to pay. That simply means, imagine a situation that I buy inventory or the masks on credit. On credit, what will happen?
Creditors will come into liability
Yes.
side.
Now it will be a liability. So that you need to understand when you are trying to understand the overall balance sheet, right? 5 chats I will check out. Okay, who is saying no, sir? Dr. K. Suvarchala Rani, you are saying no for what? I'm not getting you. Is it okay? Can I move ahead? Are your queries answered?
Yes, sir.
Okay. So let us move. Okay, so what happens when the things change? Every day something happens in the business and thus the balance sheet changes every day. We don't look at it every day because we formulate it at the end of the quarter or at the end of the financial years, right? And this is how it looks like, right? Right hand side, fixed assets, current assets, left hand side, long-term liabilities, current liabilities, as easy as it is. We will be moving through what do you mean by fixed assets, what do you mean by current assets, long-term liabilities, current liabilities, and owner's equity. My focus will be in understanding owner's equity because in the next sessions or so, you will be understanding this into more details, understanding each statement into more details, right? So this is how it looks like, owner's equity, long-term liability. So what is the difference between the previous slide and this slide is that now I have started taking into consideration the timing. When I say fixed asset, I'm talking about land building machinery kind of thing, which are going to stay with me for longer duration. Current assets are the assets which we are saying that within a period of 12 months, 1 year, they will be converted back into cash, and therefore I am supposed to receive something out of it. Current liabilities, within 12 months, 1 year, I am going to pay, right? Long-term liabilities going to stay with me. I'm not going to return them as early as they seem, okay? And owner's equity is the term which we are saying, saying that this is what is owner's contribution into business. This is what is owner's contribution into business. So let us move ahead, right? So go line by line. Go line by line. First line says John started a business by investing a cash of $10,000 and furniture of 1,000. What are the total assets in this case? As simple as it is.
11,000.
Okay, 11,000. Any doubts in anybody's mind? Where will this cash go? Short term, long term? Where will this cash go? Short term, long term?
Furniture in long term.
Okay, furniture in long term, cash in short term, but both on the asset side, total asset.
Cash is a current asset and furniture is a fixed asset.
Great, great. Okay. Line number 2, Michael started a new business and sold goods worth what is the goods worth? $1,500 to one of his customers on credit on the first day. Where will it reflect?
Debtor side?
Asset or liability?
Asset.
Asset. Why? Because whatever you have done, it is expected to give you money in near future.
Outstandings?
Right? Yeah, outstanding. So it will come to you, right?
Yes, sir.
It will come to you.
Asset side under debtors.
Okay. I'm not bothered about what name you give. You just try to understand whether it is on the right hand asset side or left hand liability side and what you are expecting, right? And if you go by the assets as a title of this slide, everything mentioned here must be belonging to assets. Let us understand, is it the case? Tony has been running a small business since past 10 years. He recently bought a trademark from another business by paying $5,000. Where will it reflect?
Asset.
Asset. Okay. Now try to understand, this asset is not a physical asset.
Yes, sir.
This is a, we will say, fictitious asset. This is a notional asset because it is just a piece of paper which allows you to use that trademark, whatever it is, right? So it is not physical asset. You cannot touch it like that, but then it carries value and it unleashes its value in a period of time. So that is why we say that it is also an asset, although it don't appear like a asset, right? Okay. Melissa started a new boutique business and bought inventory worth $15,000 on the first day. Where will it reflect?
Asset side.
Asset side. Okay. And in our case, we have already given this asset as a name as inventory.
Capital.
Right, inventory. Let us deal with liabilities now. John started a business by borrowing a sum of $20,000 from local bank. Now, where will it go?
Liability side.
Liabilities side, because you are expected to pay back this loan. Michael started a business and bought goods worth ₹5,000 from his vendor on credit. You bought it. The goods are with you, but you are not paid for it. Yet to pay, soon to pay, about to pay. So where will it go?
Liability side, but as an inventory, we can also put it into asset side.
Okay, you can also put it on the asset side because inventory will increase, right? So, but this 5,000 will go. Say now you are getting it that this is having impact at two places, right?
Both the sides. Yes, sir.
Both the sides. Okay. Well, we will take that. Tony paid salaries to his employees worth $5,000 for the month of March 2021 on 2nd April 2021. So he has paid March salary on 2nd of April. So on 31st March 2021, where will this salary go? Assets or liability?
It's a liability. He has to pay.
Outstanding.
Yes, outstanding wages or outstanding salaries, you will say. So he has to pay in near future. So it will be on the left hand side. Is this thing clear?
Yes.
Okay. So for a layman, what a balance sheet is like? Right hand side, something is coming. Left hand side, something is going.
Yes.
Right? Okay. So what do you want? You always want this right hand side to be bigger. Yes, no. You always want this right hand side to be bigger. Yes or no? Yes, you want it, right? But you know that when the right hand side increases, left hand side automatically has to increase, because just now we have said that balance sheet balances. Balance sheet balances. So let us understand what is happening exactly. This is the term which we need to understand: equity. Equity is a residual figure. It is a balancing figure, and it is obtained by deducting total liabilities from the total assets. It is also known as capital, net worth, or owner's equity. So the formula to calculate equity of the business is, it is simple. What is that? Total assets minus
Liabilities.
total liabilities. Right? Total assets minus total liabilities. So it appears to be a balancing figure, right? And the game that is called business is done to increase this figure called equity. The figure called equity, or the net worth of the business, or owners, what you can say, money. So everybody is trying to increase that owner's money. So when it is a public company, everybody who is subscribing to the shares of the company becomes a owner. So everybody's wealth is being targeted, right, on the upward side. And if it is a sole proprietor, only one person doing the business, there also the aim of the business is to increase the owner's worth or owner's equity. Okay, now comes the question related to equity. John started a business by investing $10,000 and machinery of 3,000. In this case, the capital or equity of John's business will be
$4,000. Sorry, 13,000. 13,000.
13,000. Okay. Any other answer? Anybody who knows the subject, you can also help us. What do you think is the answer? $13,000. Why? What is your money put? So John put $10,000 and a machinery of $3,000. So he also bought the machinery of $3,000. So it is $13,000, right? Assuming there are no other transaction on first day. Think about this. Michael started a business by investing cash of $2,000 and purchasing goods costing $4,000 on credit. In this case, the equity of John's business will be
2,000. 2,000.
Sure?
Yes, sir. 2,000 equity.
Sir, is it minus 2,000?
Is it minus 2,000? Okay, where will it appear? Assets or liability? 2,000. Where will it appear?
Sir, 2,000
In
is
the
on the
cash
asset side
and
and
in
4,000 in the
capital.
liability.
Yes. So 2,000 is the money put in by Michael into this business. 2,000. So liability, equity.
Yes, sir.
Okay. And now he is purchasing goods costing 4,000 but not paying for it. Where will it reflect? Liability, short-term liability.
On the liability side and goods in the
And stock, sir.
inventory side as assets.
Okay. So now you try to understand that 2000 belongs to Michael under the heading of equity and 4000 belongs to the company under the heading of current liability. So liability side total is 6000. But when I ask you in this case, the equity of John's business, it is 2000 or 6000?
It will be 2000 only.
It will be 2000 only, right? It will be 2000 only. So we move ahead, right? Those who are having any doubt, we can discuss it definitely very soon. Don't worry about that. Okay. So one more, preferably the last more one, just to understand whether you are now in a position to get into the thing, right? So Tony closed the financial statement on 31st March 2021, the last day of financial year, which with the following balance sheet figures. I will go back to that slide after I discuss with this, right? The last problem, we said that 2000 is the equity, we'll leave it there. Okay, so let us understand. Assets, cash 1000, bank 5000, furniture 1000, accounts receivable 3000, salary advance given by you is what is called as 500, right? Okay, liabilities, equity you need to identify, accounts payable are 2000. Just like in the last problem, they were.
Sir, 7,000.
10,000.
7,000.
7,000.
Okay, 7,000. What you have done? You have totaled all the assets and subtracted all the liabilities. So the resulting figure is equity, right?
Yes, sir.
Yes. 7,000. Any other answer apart from 7,000? Anybody who's thinking of other answer? 7,000. Right. So Nirosha
3,000.
is
3,000.
Huh?
3,000.
3,000. Okay. Can you explain why do you think that the equity in this case is 3,000?
Because first we have to add all the assets like cash 1,000, 5,000 bank, 1,000 furniture. So that is total 7,000.
10,500.
And account receivable is 3,000. That the total amount is 10,000. And
Okay.
we have to deduct that amount. Sorry, sir. Liabilities amount.
Can you repeat, please? 1,000 plus 5,000, 6,000 plus 1,000, 7,000 plus 3,000, 10,000 plus 500.
No. It's a salary in advance. It's the liabilities.
Okay. Salary in advance is a
Liability.
No.
It's
Salary
asset,
you
sir.
have paid in advance.
It is asset.
It is asset. It is mentioned into asset side. Salary you have paid in advance.
Okay, I understand, sir.
Okay. Now the answer. Okay, who is driving? Please drive with care.
Sir, it's 7,200.
From where? Rupali, yes, you are also right when you say 7,000. But from where this different answer is coming? 7,000 what? 200?
500.
500. Okay. Why do you think 7,500 is the answer? How can you explain your calculations, please? Can you explain your calculations, please? Yeah, true.
It comes to the 7,000. Sorry, sir.
7,000. Okay. So we go ahead with 7,000 as the answer. But as I said, I will go back now. I hope that everybody understands this. The equation of equity. Equity is nothing but total assets minus total liabilities. Equity. I will go back. Total assets minus total liabilities. What is the answer here in Michael's case? Do you see that there is an issue here? Okay, I will just give you what is that issue. Who is this person? Michael. Who is this person? John. So what mistake you have committed? Whose answer was this, John's or Michael's? Okay, think over it. Why I wanted you to note it that every number is important. Every position is important. Although it is a snapshot, although it is a financial position on one single day, you cannot afford to lose the minor details. And moreover, we are trying to read the balance sheet between the lines. We are trying to read the balance sheet between the lines. You may not believe it just now, but we'll try to do it very soon. We'll try to do it very soon. So let this be a question mark in your mind and try focusing on the minute details, right? So where can I get real balance sheet is the question now. Where can I get real balance sheets? Now we are talking about, assume that this is there, John is there, Michael is there, and so on and so forth. Where can I get real balance sheet? So the real balance sheet you will require because you want to play with it, right? So there are two things. There are multiple sites like moneycontrol.com or the company websites where you want to, because it is a statutory requirement to post your balance sheets, financial statements on your own website, right? And SEBI is the controller of this, and therefore they want it to be displayed, right? Many stock exchanges also want you to have it there, right, where your shares are listed. So try to understand. Have you visited Money Control? I suppose that you must have visited Money Control, maybe not in this context, but in some other context, right? So Money Control is the place where you can right. Company website is right. I will take that. Okay, so the question is, you get those balance sheets there. Where? On the Money Control site, company websites, which are prepared by the finance accounts department of those companies. The question is, can you believe them? Can you believe on the numbers? Quick yes, no on this. Can you believe on the numbers which are posted?
Yes, sir.
You should, right?
Yes. Yes,
You
sir.
should believe, because that forms the basis of your evaluation. Who is this? Mr. Rajendra. Who is this? Okay. Can I discuss the matter further now? Right. Imagine this is a lazy. Who is this? Please. Imagine this is a lazy what? Sunday morning. Imagine that this is a lazy Sunday morning, right? And as a Sunday morning should be, you woke up late, you delayed your breakfast, you delayed your lunch, right? You crossed maybe say 2 or 3 having lunch. You are in a mood to enjoy a Sunday. You are watching maybe Bollywood, Tollywood, whatever movie you love to be, right? So you are watching that movie, sitting into your drawing room. The whole family is there, and everybody's mood is like this. Everybody's mood is like this, and you receive a call. You receive a call from maybe somebody you know, and he is saying that he is planning to visit your home in another half an hour, right? 30 minutes time. You are welcoming him that, okay, no issues, please come, right? You share your address and so on and so forth. What will you do from that instance when you put down that phone to or till the time that gentleman arrives, maybe with his family and children? What will you do?
We arrange.
Right. So when I say it is a lazy Sunday morning, we are assuming that nothing is structured in the drawing room. Right. So everybody, literally everybody is instructed to present the drawing room in the most presentable way. The time available is half an hour. What will you do? What will you do? Yeah, you will try to
keep all the unwanted things in the other room and keep the
yeah,
drawing room.
yes. Right. Everything all set, 30 minutes, maybe 15-20 minutes, everybody, okay, including yourself. Not only the drawing room, the sofa set, the sitting arrangement, the lighting, etc., etc. All unwanted things will go to some different room. Plus, all maybe 4, 3, 2 of you will dress up nicely to welcome the guests. Yes. Yes or no?
Yes,
So now imagine if in a household like this, if 4 members are trying level best to showcase the best thing out of their home to somebody who is external to their home, imagine what the companies must be doing in order to portray that all is well inside. They know this is the only way I am going to talk to the external words, these financial statements. So can I use my skills so that even if the things are not as they are, I try to project as if it is good, right? So that the real world, the people outside will assume that all is well inside. They will value my company in their own eyes and they will propagate it like this, right? So whosoever was involved in the process, right? Imagine a case that the visitor at your home, maybe your friend or the person who is coming to your home, request you that this appears to be a very good drawing room. Can we see your 2 BHK, 3 BHK? What will happen? What will happen? now you know it, right? Now you know it. So what you should say is that don't believe on whatever is projected. Numbers are real. Numbers are real on the day. Next day, they may change. Next day, they may change, right? So let us watch this carefully. What happens when the lady leaves this lift?
They release their stomachs.
Yeah, that means that the real picture is coming into forefront, right? But they are trying to project as if they are very fit, right? Likewise, everybody inside the company will try to project that company is financially fit, healthy. You need to understand the means and ways to identify where they might have played with the numbers. Well within the boundaries of the existing laws. But still, if you want to reach to the real thing, you need to visit these statements over and over again just to check out whether there is any flaw in the reporting or not. Yes, no. Hopefully you understand now the mood of the presentation. Yes. Yes.
Yes,
This is window dressing. So one of you guessed it rightly. It is window dressing. So when we say I want to read the balance sheet, apart from understanding its structures, its contents, and the meaning of those numbers, I also must be in a position to understand that something this also can happen. Right? So when I say that you need to appreciate this, you need to understand that what things can go wrong, whether you should depend on your interpretation or you should always have a question mark regarding your interpretation, that these things needs to be checked further in order to understand the numbers better. Right? So action taken to improve the appearance of the company's financial strength. Why? Because that is what is going out. So whole house is being viewed through this window. So whatever is appearing through this window, that is whatever is can be reached out through this window. If I make it all well, chakachak, all structured, what will happen? The viewer will get impression that this is a nice company, right? So that is how the things are. So they do it well within the framework I said, but you need to understand what things can go wrong. That simply means you will have to keep visiting those statements, right? You'll have to monitor them closely before you make your final decision. I'm assuming here that we are doing this as an investor into this company. Maybe as somebody who is trying to give or forward loans to this company, we need to understand what things can go wrong, right? So window dressing is one such thing which you need to understand as even if as a layman, right? So window dressing is particularly common when the business has a large number of shareholders, so that management can give the appearance of a well-run company to the investors who probably do not have much day-to-day contact with the business. If it is a closely held company, I don't think there is a need for window dressing. Everybody is aware about what is happening, right? But then when there is something called as agency problem, that means suppose you buy one share of Reliance, what will be your status? Theoretically, you become part owner of Reliance Industries. I repeat, when you buy one share of Reliance Industries, you become part owner, shareholder of Reliance Industries. Okay, the bigger and a better shareholder is who? Ambani. Is there any comparison between you and him?
No.
He is also shareholder. You are also shareholder. He is holding shares into maybe thousands and lakhs. You are holding one share. You have also got one vote. Can you consider yourself as a owner? As a shareholder, will you get entry into the premises of Reliance Industries?
No.
No. That simply means that what? You will get into this only through these statements. Maybe you are allowed to attend AGM where these statements are presented. Got it? So that is what I'm trying to suggest, that whenever we are talking, say, if NAC is coming, what do you show it to the NAC? The good things or the bad things? Don't you try to hide those things which are not up to the mark and try to project things where you are fared with? You do it. This is a natural tendency, and therefore you need to understand when the stakes are high, you need to understand that are these things going out of proportion? If yes, can I caution myself before I take any action regarding this company? Maybe investment action, right? So that is how the things are. It may also be used when the company wants to impress a lender in order to qualify for a loan, right? Try to understand. If I know, you also are knowing, everybody knows, it still remains a skill. It still remains a skill, both to project and to decode. To project and to decode and to understand, okay, this was the extent of window dressing. So there is a definite procedure involved, right? So how do you do it? Few examples. And when do you do it? Just before the end of accounting period. So March end is crucial. March, that is when you are nearing 31st March, you try, because as on date 31st March, right? So as on date is very important. First, cash window dressing. What will you do? Instead of paying this month, you will say that I will pay you next month. Abhi March end chal raha hai. Situation is tight. Situation is not tight that way. But situation is tight. Now there is March end. I will not pay you now. I will pay you maybe first week of April. Is that okay? The next gentleman says it's okay. What will happen to your balance sheet? What will happen? It will appear cash rich on the day. On the day. What happens next day is never project.
But
Yeah.
still it will be there in the liability, no?
Obviously.
Then
that is what I'm saying. Now you are into it, that it will be there somewhere. Right? You cannot take it away, right? But appearance wise, whether this is a cash rich company, the answer to this will be yes, this appears to be a cash rich company, because under the heading of cash, you have sufficient cash. Are you getting this?
Yes.
Okay. Accounts receivable window dressing. What do? You sell, you ask your salesperson to, yeah, you announce keys.
Double document.
Who is this?
कुछ पूछना है इसमें?
Geeta ma'am.
मैं चेक नहीं करूँगा, आपको कुछ पूछना?
Yeah.
बेटा सब अपने आप से ही भर रहे हैं। उधर देख लो आराम, इधर बताओ मेरे पास। तुम इधर डॉक्यूमेंट 2 मिनट।
Manish Sharma sir. Hello. Manish sir.
Sorry
Please
ma'am.
keep your
Sorry
mic
ma'am.
on mute mode.
Sorry ma'am.
I would also request Geeta ma'am, Geeta Joshi ma'am, please keep your mic on mute mode.
Yeah, she has kept it, right?
Yeah.
So now we can imagine a situation, what must be happening in our classes. Right? Therefore, we say that this online is not good for India. Why so? If teachers are doing, faculties are doing, can you blame students?
Absolutely.
Right. So that is how the things are. This is also a learning of FDP, that you cannot expect much from it. There has to be some different way or means of doing it. That does not mean that those who are listening carefully, okay, are not getting it. But the thing is that there will be people like this, wherein they also need to be addressed, because they are doing it out of some compulsion, and therefore the things are. Normally I start my FDP on different note. Today I have started on different note because it is an online thing, right? Otherwise there has to be some eye opening in the FDP, that whatever we are doing, whether it is right or wrong, or is it only for the certificate, and if your student is also doing it only for the degree, will you allow him? Will you allow him is the question, right? So if you are busy, don't indulge into it, right? Okay. Anyways, so accounts receivable window dressing can be done the way it is. Capitalization window dressing. This is something which you will understand maybe in further sessions. This is just day one of it. Maybe next session may touch it upon. But the thing is that you need to understand that there are areas which can go wrong, which may lead you to misinterpret the numbers, right? So because today the things are different, next day the things are different. Now what happens normally is that March end, in order to project better sales, what you instruct to your salesperson is that go and sell out. Ask all your distributors to stock. Now, when you go out and ask your distributor to stock, they will say that I don't want this much of stock. Number one. Second, I am not going to pay for it today. You say that I am not asking for money. You just buy it, you just store it. What happens to this? When you sell it off, your sales figure, because sales is receivable, it still is an asset, right? Somebody is going to pay you after some time. It still is an asset, as you have seen the definition of asset. So it is a short-term asset. You call them as what? Debtors. So they are bills receivable, right? So you will get them very soon. What happens in reality is that next month you get sales return. Next month you get sales return, and that is where you need to understand that this can go wrong. So you cannot evaluate, right? Like the Palmistry, that this is how the status is, right? This is the line, these are the lines, and looking at these lines, I forecast. No, I will have to go in the past also. I will have to check the forecasted statements also. All of them are available, so I need to check out. And therefore, I said that the numbers are there, statements are available. You will have to start doing or decoding it one day. So fixed assets window dressing, sale of those fixed assets with large amounts of accumulated depreciation associated with them. So the net book value of the remaining assets appears to be in negative. Plus you get cash out of it, right? So revenue window dressing, offer customers an early shipment discount. They will be accelerating revenues from the future period into the current period, and so on and so forth. So these are normal sales promotion tactics which we adopt at the end of the year, with one intention in mind, that you want to pretend, you want to project that your sales are good, all is well inside, right? So these are all last minute dressings which we have done in your home when somebody was unexpectedly coming to your home, right? Expenses window dressing also is like that. Withhold supplier invoices so that they are recorded in the later period, and so on, so forth, right? This is the last point which I wanted to touch upon, and that is Altman's Z-score, right? So if you remember, 2008 was the crisis period, and we were talking, so economies move up and down, and then we say that there is a recession due every 8-10 years. Now the question remains that, looking at these important statements, three of them, primarily balance sheet, can I estimate, can I project the probable issues which a company might face in near future, right? Whether the academic fraternity, whether the evaluators, those who are doing analysis on the company's balance sheets and other financial statements, whether they were in a position to forecast that there is something going wrong in 2008. Was there any clear-cut indication available from these financial statements, including balance sheet, that something wrong or something bad is on plates? An answer to this is yes. In 2007 only, the researchers were in a position to tell that the financial distress, right, the insolvencies are on offer if we don't pay attention to, because the numbers were speaking like that. Numbers were speaking like that. That simply means that this is a science more than an art, that you have numbers, you arrive at certain ratios in order to interpret those numbers, how they are moving, where they are moving, and then you can forecast along with the direction where they are heading to, and then therefore what can go wrong with the company. If that is possible, definitely there is sense into it, because there is both art and science involved into it. So this is a variation of traditional Z-score. You use it for accepting or rejecting the hypothesis, right? Likewise, this they also are using the same fundamentals, right? Altman has used it. This has evolved over the time from 70s till this date, right? It uses profitability, leverage, liquidity, solvency, and activity to predict whether a company has a high probability of becoming insolvent. So they project this financial distress. How do you calculate it? I'm not going to go take you into details of it. Just to give you a fair idea that this is how it looks like. It is just like a regression equation, y is equal to a plus bx plus c kind of thing, right? So there are few variables a, b, c, d, and e. These are 5 ratios. First ratio is working capital to total assets ratio. Second is retained earning to total assets. Third is earning before interest and tax to total assets. Market value of equity to total liabilities, and sales to total assets. You can clearly see that all the denominators belong to balance sheet. All the denominators belong to balance sheet. In case of A and B and C, right, you will get these numbers in balance sheet. Market value of equity you will get in market, and sales you will get from the profit and loss account, the other statement called income statement. That simply means that this Altman Z score draws its numbers mainly from the balance sheet, mainly from the balance sheet. If you know that this is a score which can be used to predict whether this company is moving in the right direction or there are any hurdles in the path, you will be in a position to understand. So what was my intention behind giving this is that there are methods, there are mechanisms which will help you to understand, okay, just to safeguard your interest as a investor, as somebody who is into business. Most of the times we conduct this entrepreneurship development workshop, and when we say entrepreneurship is a skill, it is an attitude also. We know that everybody is not expected to be expert in 3 domains, right? One is finance and accounts, second is human resources, and third is marketing and sales. We know that most of our entrepreneurs are expert in their own field, which take them to the product or service. But then managing these 3 things, that is human resource, finance, accounts, and sales marketing, is also a skill which is required. Today, whatever we are discussing is this skill. We say that a person who is a good engineer, good technocrat, good chemical person, okay, he is in a position to devise something, to create something. But at the end of the day, commercialization is on the offering. And therefore, you need to understand as a businessman all those 3 things apart from your domain knowledge. So minimum those things, that I'm not asking these persons to make their own balance sheets, but at least they should be in a position to understand and interpret the numbers which are mentioned by their own CAs, right? Most of the time it happens that they do something right from the detailed project report. They do the number crunching. The person who is about to start his business is unaware about from where those numbers have come, or how do I take those numbers, right? So that is where the thing is, that you cannot be isolated from the numbers. If you are a human resource person, if you think that your area is to take, say, right man at right place at right time, and therefore your job is to pre-select, your job is to train, your job is to motivate, right? And therefore you are not bothered about these financial numbers, you are wrong. You will require, because somebody needs to invest into training, right? So training is a cost, and therefore there has to be a return on that cost. If you are out and out marketing and sales guy, and if you are thinking about formulating a scheme which is a promotion scheme, sales promotion scheme, you need to understand many things, okay, including these things, that how it is going to impact on the sales. Sales is the first line, that is the top line of the other statement called income statement. Ultimately, the bottommost or the bottom line will be reflected into the balance sheet. So you need to understand that all these things are linked, and you cannot operate in silos. You cannot say that this is not my cup of tea. It has to be your cup of tea. At least the minimum understanding of all these statements has to be there. Has to be there. So this is what I wanted to convey to you, that this Altman's z-score is there, right? Now the last and important item which says that how do you compare balance sheet? Now we are not talking about one, but we are talking about many. So are you comparing balance sheet because you are comparing two companies? So are there any two balance sheets in front of you? Then the rules become very simple. Compare the comparables. Compare the comparables, right? Apple with banana comparison will not help here. So what do? You convert the numbers given in the balance sheet into ratios. And now the ratios become the item of comparison. So this is ratio analysis is one such area. You will learn about it, right? In this very course only, right? That how do you calculate ratios and how do you interpret ratios? And the best part is that all those ratios in ready-made form are available, okay, on all these websites like say moneycontrol.com and so on. So you need not spend time in calculating them. Calculation is not intended. What is intended is that whatever is calculated, can you interpret it, right? So analysis and interpretation is what is the expected thing out of this, right? Through common size balance sheets also. So this also you will try to learn, right? And through year-on-year comparison, and this is most important, that what is happening to the company over the period, right? So if you believe on that gentleman whose photo was there, right? The greatest investor, you said that, who has accumulated huge wealth, Warren Buffett. If you look at his principles, then his choice of companies was very, very good, right? So he betted on what? Coca-Cola. What is so good about Coca-Cola or Apple? To try to understand, Coca-Cola as a product has not changed much over these years. Apple as a product has not changed. I was talking about say iPhone has not changed much over these years, right? So similar kind of products being offered to general public, where they are saving is that their manufacturing costs are very, very low. When you are not modifying your product every now and then. Now we are talking about the core of the product. So Coca-Cola has not changed over the year, right? So that is how the things are. So you need to understand through year-on-year comparison also that what is happening. So only numbers will not play, right? But can numbers tell you, right? So if I don't give you the name of the company, if I don't give you the business in which they are into it, but still you will be in a position to tell me that this appears to be a good company for investment. That is the strength of this analysis. Without knowing the name, without knowing the business, without knowing the age of the company, you are still in a position to give fair bit of idea, okay, through this process called ratio analysis or interpretation of balance sheets. So this is what I wanted to give you, that this is what is possible. Everything cannot be covered because this is a layman's course, and therefore we are expecting that you make a slow but steady start into this particular thing, understanding fully well that you can, right? So the very intention was like that, right? So what I am asking you right now is that, is there anything you wanted to know about balance sheet in particular? What are your expectations from this course? Also has to be the question on day one.
Yes, sir.
So that we can fine tune the things, right? So this is your time now. You can use this slide to let us know that is there anything you wanted to know?
Yes, sir. Yes. I
Okay.
want to say something over here. Am I audible?
Yeah, you are audible.
Okay, so I'm saying, we want to know about ratios also, like what are the different ratios, how to calculate them, and what is the analysis of those ratios.
Okay.
How to apply those ratios. So that is something, if we can add it somewhere, I don't know.
Yeah, it is there. Don't worry. It is highly skewed towards that ratio analysis part only, right? So don't worry, it will be covered into different topics, but well taken that ratio analysis, how do you calculate and how do you interpret? And just now I said that they are available in ready-made form. So better we take that thing and then comment on this, that this ratio formula is this, and these are the numbers. What do you interpret out of this, and where we can go wrong in interpreting? I think if we are able to do this case on case basis, today was the first day, so I have tried to make it as simple as it is, just to stick with these three words: one equity, second asset, third liability. But very soon when we go deeper inside it, the course or the program, you will definitely face certain problems, because the things will not be that easy as it appears to be, right? So don't worry about it, we are going to cover it. What else you wanted? So Benny Singh's consideration is well taken. What else you want? Hopefully for next class you are ready with your Excel sheet, because that must have been shared with you. There or you will also feel that you are doing something, right? What else? Anybody else? Okay, chart.
Sir, where does the CSR activity go into the balance sheet?
What?
CSR activity expenditure.
Expenditure will go definitely. Where?
No, in the sense it is the percentage of the profit.
Right.
So after arriving the profit, the expenditure should be mentioned in the sense.
If you are talking in strict sense, the CSR expenses will not come into the balance sheet, because after deduction of CSR thing, right? So you first calculate profit and then you appropriate profit, right?
Yeah, that's what is my question, sir.
Right. So first is appropriation, and this is a part of appropriation. The CSR expenses will not be there. But then if you look at the overall set of financial statements, you will always observe that Government of India, SEBI, wants that what all you have done, there is a separate page. Right. So probably you are taking us to the new topic, which says that are you trying to also evaluate the companies who are better at CSR spending compared to the non-CSR spending? Because you are now moving to the ethics of investment, that as an Indian, you should be promoting and investing into those companies who are taking care of the public at large through their CSR spending, right? Or through their green spending, something of that sort, right? So that is also a area, right? But for you, I'm saying that it will not be, although it is an expense, right? You are not expected to derive any benefit out of it. Had it been the case, you should have got CSR expenses registered straight away in fictitious assets below the goodwill. But it is not the case. It is not the case. Yeah.
Sir, in the window dressing part, there was one point with depreciation. Can we just get it once?
Let us understand this. Depreciation is definitely a part, and when they do window dressing, they change the method of depreciation. They change the method of depreciation, but try to understand this is not that easy, because SEBI wants, if you are changing it, you will have to explain it a lot. And definitely you cannot change them abruptly. This year it is one method of depreciation, second year this is another. No, that frequency is not there. Therefore, purposefully I have taken it away. Depreciation I have not mentioned, but depreciation, yes, is one way of mentioning it, right? So this is how the things are. So let us understand how depreciation affects the balance sheet. Are you interested in knowing that?
Yes, sir. Means just like we have the electronic devices or the building, or and we have a certain number of years fixed up in how many years to distribute it.
Right.
But in the window dressing, the point I couldn't get.
Okay. Now you try to understand this. Will you be interested in claiming more depreciation, or you will be interested in claiming less depreciation if you are trying to window dress?
So I don't know. I was knowing that we have to fix it like let us say for electronic devices, it is for 4 years. Then
Right.
every year we have to reduce it to 1/4 of amount. Means
Right.
we have to take it that way.
Right. No.
But I would like to have the lesser depreciation because my asset value will be.
Okay. So that was a precise question. Madam, you try to understand, right? The question was, depreciation can be used to manipulate the value of the asset. Number one. Number two, depreciation can also be used to manipulate the profits. Both way. We are now into balance sheet, so we'll stick to first, which says that you have a depreciation, and just now you got the answer that if you are in a position to reduce the depreciation, what will happen? You are in a position to get better value for your assets. The thing which was mentioned in the slide was, I will do away with the assets which are getting highly depreciated. Because when I get highly depreciated assets into my balance sheet, the value of the asset, which is net value of the asset, becomes very, very small. I don't want this very small value asset to be reflected. So what I do instead is that I try to do away with that asset. And how do I do away with that asset? So you will be perplexed to know, you must be puzzled to know, if a company needs asset, how can it sell that asset? Right? So there is something which is called as off the balance sheet financing. Suppose I don't want that asset to be reflected into my balance sheet. Is this point well understood? I will take you to that slide first, which has raised these concerns. Madam, am I on the right track?
Yes, sir.
Very good. This is what we were talking about. Sale of those fixed assets with large amounts of accumulated depreciation associated with them. So the net book value of the remaining asset appear to indicate relatively new, right, cluster of asset. That means whatever is remaining, somebody is monitoring you. Last year, these were the assets. This was a depreciation net asset was like this. This year, you have done something, and it appears to be the case that you have bought new assets, something of that sort. So let us try and understand. If I want to use asset, but this asset I don't want to show into my balance sheet, are there any ways? Or take it other way. I need cash. I can get cash only when I sell asset. There are no other ways for me to get cash. Can I sell the asset which I need?
Yes.
I can sell the asset which I need. And what next I will do? I will lease the same asset. Somebody has bought it. Somebody has bought it.
Yes, sir.
So what I will do is that I will take it back on lease from that gentleman. Now where will it show? Will it be in my balance sheet, the asset? No. This asset will be in the balance sheet of somebody else. So I am just renting it out. In the process, what I have done? Two things for good for balance sheet. Number one, removal of an asset which was taking huge depreciation. Number two, generating cash by selling of that asset. Number three, using the same asset, that is continue to use the same asset by paying something called as rent or lease rental. Is this thing understood? Is this thing understood?
Somewhat.
Okay, so what I am doing, so that is where I said that day one, it should not be that heavy. But day one, if I am say pressed to do this, I will do this. There are options available. Now, how do you know that this has happened to this company? After doing this, there will be a lot more improvement in the balance sheet. You will not deny this. The weak asset is being sold. It is no more part of your balance sheet. Whatever it has done, it has added to the cash of your balance sheet. Yes, no?
Yes, sir.
Okay. Now, how do you identify where that asset has gone? Will it be still available in the balance sheet? Your balance sheet?
No.
No.
See, it will not be available into your balance sheet on the right hand asset side because you have sold it off, but because you have rented it back, because you have leased it back, the liability you have generated, and in the current liabilities, you will see a new head. That simply means that whenever you are in the process of identify something or trying to get it into details, you should also pay attention to all the schedules which are attached to this balance sheet. So balance sheet is not a single page document. It comes with multiple schedules, right? So balance sheet is just like an index. Details follow. Details follow. So give us some time to pass on those things to you. Day 1, session 2, I think this much is enough, right? So let us pay attention to the next class. Take a little bit of break. Varsha is saying something. FDI and DI investment are also part of liabilities. Anybody investing into your company is a liability. Even if you are investing, it is a liability. So question does not arise. Yes. Right. So these were the references I have used for this particular thing. I think these PPTs will be shared with you. I will share these things with you, right? So can you move to the real balance sheet? Yes, it is left to you. Visit that site called what? moneycontrol.com. Go to the financial sections. First, you can go to the company, choose the company of your choice, click on it. You will get financials. Click on financials. You will get balance sheet, profit and loss account, so on and so forth. Go and just try to interpret whether you have learned something today and you can see it there, or it's a different world there, right? So with these remarks, I wish to stop. Madam, I'm stopping the share.
Thank you so much, sir, for an excellent session. And the questions posed by you were definitely challenging for non-finance people, but I personally believe that somewhere they were thought-provoking and challenging for finance people as well. So, and we are really excited to hear from you in the coming days. So, sir will be with us in tomorrow, session 1. So, and session 3 is also being taken by sir itself. So we are really very much excited to learn from you. Thank you so much,
Right.
sir.
So, but before I move ahead, because I'm supposed to take tomorrow's session also, my one simple question to you is that you all take home loan. You all take home loan to create an asset for yourself called home. Do you agree to this?
Yes.
Do you
Yes,
agree
sir.
to this? Yeah, okay. My question to you is that, does your home fit into the definition of fixed assets? Does your home fits into the definition of fixed assets? We'll start our next day with the answer to this question. And are we committing any mistake when we take home loan and create asset called home, right? So with this remarks, I prefer to stop, right? So hopefully everybody understood the question. Home loan, you create home as asset, whether home, your own home, sweet home qualifies the definition of asset, right? So let us stop. Thank you.
Thank you so much.
Thank
sir.
you very much.
Thank you.
Thank you, sir.
I would request all the participants to please fill in the attendance form and the feedback form. The link will be closed in another 10 minutes, so please do the needful.
नहीं वो डाला हुआ ही था ना, मतलब पहले से ही टाइम तो पता ही होगा.
What time do we have the next session, ma'am?
Ma'am, we will start exactly at 3:15. And I would request all the faculties to please pay attention when to your mic. It looks really very unprofessional. So I sincerely request all the faculties, uh, please take care of your mic.
And what is this registration ID, ma'am?
Ma'am, this is just for it is just for our internal reference. So we have generated an ID. It's nothing but a serial number because there is a lot of confusion in terms of name. So we have given a registration ID. So
Oh,
it's just
instead of,
for our internal reference to cross-check the feedback form and the attendance. Nothing else, ma'am.
oh, I missed in the first session, second session, I put my application number. Is
Yeah,
it-
I have seen that. I have seen that. Yeah, one more thing, participants, please put up your registration ID. The updated list is already mailed to you in the morning also.
Yeah, I
And the
just,
PPT and the PPT and the recording of the lecture is also being mailed to you. So please download it from your Google Drive soon.
thank
So
you,
we'll
ma'am.
just meet after 5-7 minutes. We'll meet exactly at 3:15.